Welcome back to my channel. In this video, I wanted to cover MPW. This is a troubled company that is shorted by a lot of investors that believe the company's not going to make it. I happen to think that they are going to make it, and they announced their earnings today. There was also other news announced this week around their biggest tenant that has had a lot of financial trouble and is actually in bankruptcy. So all that trouble has really led to this stock really going down in value over the past year. They pay a nice dividend, as most REITs do, and they continue to have positive funds from operations. I wanted to take the results from the first quarter and update my analysis on this company and decide whether I should continue to buy shares in MPW, just hold my shares, or sell my shares in this troubled real estate investment trust. Now, real estate investment trusts are income producing investments. It's an attractive option to have in my income portfolio. This one has the added twist of being a really risky stock. It might stay in business and double in value. It might go out of business and really be a loser for me. I knew that going in. I analyzed their financials and felt that, hey, it seems like this company is going to make it. They have really valuable real estate on their balance sheet, and they've been selling it off, trying to create cash. And that cash could keep them going until this troubled tenant really recovers, gets their business back on track. The other thing I like about MPW is they rent properties in healthcare. It's a very stable industry. It's not like, hey, we're not going to need hospitals anymore. We're not going to need doctors anymore. No, we need them all the time. So as long as the tenants, stay in good financial health, this type of REIT should do well. For however it happened where they rented to this tenant, I believe their name is Stewart. They should improve the way that they find tenants and they qualify them so that this doesn't happen again. Obviously, that's hindsight, but obviously that should be something that the company learns from. Now, let's take a look at their fundamentals and also their Q1 earnings to see what's going on. And then I'm going to do a valuation on the company, update my valuation. Then I'll share with you what I plan to do with this stock. Before I jump into that, just a reminder that I'm an individual investor, just sharing my journey as an individual value investor. I'm not recommending you buy MPW. I'm not recommending that you sell it. And I'm not providing any financial advice. Now let's take a look at MPW. So MPW is a $2.6 billion market cap company, and their revenue is $871 million. Revenue has been decreasing because they've been selling off properties, and one of their troubled tenants hasn't been paying rent, so that really hinders revenue. They pay a 60-cent per year dividend, which ends up being 13%. The price target that analysts have shows that the stock price is discounted by 33%. They have a hold rating on the stock. That's interesting that analysts have a hold, yet it's shorted by so many investors. If you look at the stock price over the last 5 years, it has really dropped. This used to be a stock that was valued around $20 per share. Now it's down to $4 per share. You can see in their income statement that revenue did drop quite a bit. It's that big tenant that if they don't pay their rents, it really becomes a big problem. Now, I looked at their balance sheet, and the one thing I did notice is that they have properties that have a greater value than their debt, which is very good. They also have a fair amount of cash, so that's good. As we look at their forecast, it's expected that the company is going to have 42 cents in earnings per share in 2024 and then grow those earnings per share. So that looks positive. I value the company since it's a REIT based on their dividend. And their dividend, and what you do for a REIT is you make it based on funds from operations. And their dividend is 60 cents. And I'll do my own funds from operation calculation. And I believe it's acceptable. I need it to be under 80. Looking at the earnings report from the first quarter, the good news is that it wasn't more trouble. It was pretty neutral. And really, the news earlier in the week that Stewart, their biggest tenant that's in trouble, is going through bankruptcy. And they negotiated with MPW and were able to get to a particular bankruptcy that tenant's going to go through. I believe the conditions and terms should be acceptable to MPW. So that was big news that happened earlier this week. Now the Q1 earnings, their funds from operations was 24 cents. And if you look at their dividend, it's 15 cents per quarter. So funds from operations higher than their dividend. So that's positive. They had a big impairment on their net income or their income statement for the write-off on the real estate related to Stewart Healthcare. And that's an impairment. That's a paper loss. So it's going to be on the income statement. They sold 75% interest in some Utah hospitals that had been reported before, and they completed the sale of hospitals in California and New Jersey for 350 million. That's one of the reasons I invested in MPW, is that it's a real estate company and their real estate is valuable and it's in demand. It's healthcare. So they can continue to sell properties until they dig themselves out of this hole. So that's one of the reasons that I liked. If it was a different company where their assets were not easily sold, then I would have probably not invested. But as you can see, they're able to sell their properties, so that's good. In the first quarter earnings release, they updated some of their financials. So let's take a look. So again, the company has a lot of real estate that they own that they carry on their balance sheet, $12.8 million of it, and they have a adequate amount of cash on the balance sheet, very good. And overall, their liabilities are 10 billion. So they have about net equity in all that real estate of over $2 billion. So that's good to see. And that real estate could be sold so they can create more cash. When we look at revenues, they are coming down. They've sold some properties. Stewart isn't paying their rent, so that's really affecting it. So revenue has come down in the current quarter. Expenses, interest is about 108 million, but their rents are 271. So it's good to see that they have a pretty good gap. Depreciation is a non-cash item, so it's just depreciating on that real estate. So that looks pretty decent to me. Here's where the big loss is, the impairment. Again, it's a paper loss. It's not like they had to write a check for 693 million. So it's just really a paper loss. And it affects the balance sheet. It's going to bring down the balance sheet as well. So overall, the income statement looks okay to me. Looks like they're operating and, collecting more rents than they have to pay in interest and maintenance fees for those properties, maintenance cost. Funds from operations, as mentioned, it's 24 cents, which is good. We'll see what they do with their dividend. I'm expecting they're going to keep the 15 cent per quarter dividend, but it's really their decision. MPW is a real estate investment trust, and I have a different way of valuing companies like this because free cash flows doesn't work for a real estate investment trust. Instead, I depend on the dividend, that the dividend would drive the value of a real estate investment trust because they have to distribute a majority of those of funds from operations to the shareholders. Now, they distribute 60 cents per share, and I'm going to use a high discount rate since it's a high risk company of 12. And their payout ratio right now is 63%. And I took the most recent quarter and annualized it. So 63 is not a high payout ratio. It's actually very good. I'm going to grow those dividends by 5% over time. It gets me a value per share of $8.57, but the current stock price is $4.43. So really big discount if we look at that dividend. If we look at earnings per share, it's expected to be 42 cents. Give them a PE of 12. And if I evaluate that way, I get a share price of $5.19, still over the current stock price of $4.43. So it provides a discount of 17%. When I blend the two and just look at an average, it's a 55% discount on MPW. It's a nice discount on this risky stock. So what am I going to do with MPW stock? Am I going to buy more shares, hold, or sell? Well, the Q1 earnings, I feel, was good news. There wasn't any more problems. They're having to go through the Stewart bankruptcy. That was a known factor. That was a known piece of bad news. And it's just, it continues to feel bad for investors because they have to get that through the whole process. And hopefully Stewart recovers and they're a viable business. And the reason I say that is Stewart is helping a lot of people with their healthcare. And I'm sure all those people want Stewart to make it so they can get their healthcare and they can live, a healthy life. So we'll see how that sorts itself out. But that was already known factor this week. It's not new news. The way they're operating the business, it looks like the business is going to make it. They're making more revenues than they do in expenses that they have to write checks for. Depreciation is not in that calculation. It's another way of saying that their funds from operations continue to be positive. So that also puts some encouragement on the table. Overall, they're selling properties, which is good, and that way they can create some more cash. And at some point, this real estate investment trust is going to stabilize and then begin to grow. Having said that, when I look at a company, I typically want to really buy into a company and feel like, hey, this company really has it together. They're a leader in their industry and so forth. This investment was different. This is an investment where it's kind of, the company is troubled and I'm making a judgment call as to whether the company is going to make it or not make it. And I believe this company is going to make it. They're in the right industry. They have really good assets that they could sell. So it's more of, do I believe they're going to make it? And the answer is yes. On the balance sheet, I think their balance sheet's fine. They have hard assets that they could sell, and their debt isn't too out of control. It's okay. They continue to create positive funds from operations. So the balance sheet's fine in my mind. Their payout ratio on their dividend is less than 80%. So now the discount on this stock, The discount is a real good one. Therefore, I'm going to continue to buy shares in MPW. I don't have a big position, but I'll continue to buy shares and add to this high risk investment because I continue to believe that they're going to make it. And if they do make it, I think it'll be rewarding for me. Thank you for watching. I hope you found it interesting. MPW is a high risk stock that is really interesting. Month to month, something's going on with the company. Again, thanks for watching. Good luck investing in 2024.